Hey, Leo, how do you hide your screen?
Good afternoon. This is the Town Council Finance Committee. It's Wednesday, March 8th, and I'll call this meeting to order. I'll note that we have a full committee present, Councilors Hamel and Shoup. And first item for action is approval of minutes from February 8th, 2023. Do I have a motion?
So moved.
Second.
Any discussion? All those in favor? Motion passes 3-0. Now for the highlight of our meeting today. There's going to be some grunt work, but before we get into it, we have a nice presentation from our finance director, Norm, who's going to help us understand fund balance a little bit better, hopefully. Hopefully. So I'm going to toss it to you.
Thank you. So I want to go through fund balance categories and just definitions and some examples of what constitutes fund balance. So if we go to the next one. The fund balance categories are defined by GASB, Government Accounting Standards Board Statement number 54. And the categories that fall under GASB 54 are on the screen: non-spendable, restricted, committed, assigned, and we'll go through the next slide and we'll start talking about the different categories.
Hey, Norman. So GASB, if you allow me to just ask a quick question, is GASB sort of the municipal equivalent to FASB?
That is correct. GASB is the governmental standard setting board for all municipalities and state
Thanks.
governments. So the first category is non-spendable, and I've tried to bold the text that I've lifted out of GASB 54. So hopefully that comes through on the audience. Amounts not spendable because they're either not in a spendable format or they're legally or contractually required to be remain intact. So non-spendable, that's our inventories. So our fuel inventory would be in fund balance as non-spendable because you've already spent the cash to get that asset. And so therefore your only next step is to consume that asset and not spend it. So
please tell me if I'm jumping ahead of the plot here, but do we have categories? Do we have accounting categories and accounts that are the same as these categories?
no, we don't.
So should we have those?
Well, no, because the GASB board states that you have to have certain categories on your statement of net position for reporting purposes so that readers can understand what your assets and your liabilities are. So we're not going to be this. These are, I guess, to paraphrase, would be a summarization of the equity side of an asset.
Okay. Thanks.
To kind of tie it to the private sector side.
Thank you.
So legally or contractually, so our cemetery funds, the corpus of the fund that maintains the cemeteries, those would be non-spendable because we have a trust in place that says that those are in perpetuity. So if we can move to the next, if there are no other questions, we'll move to the next category. Restricted, so we're working down to in the categories of GASB fund balance. They're externally imposed by creditors through such things as debt covenants. Grantors, they're imposed by grantors, contributors, or laws or regulations from other governments. Or B, they're imposed through constitutional provisions or enabling legislation. So your external impositions would be the requirements that are in our bond covenants when we issue debt. So those are external restrictions on fund balance. When we get a grant from a granting agency, the grant specifies how we spend those funds. So that's a restriction on those funds. And then an example of a contribution, if a citizen gave us a contribution to spend specifically on a certain item, such as a park improvement, that would be an external restriction on that fund, because they're not going to give us that contribution unless we spend it the way they want us to do that with that contribution.
So when we have an action item, when we receive a donation or a contribution from a member of the public or from someplace, is that the reason why we have an action item to designate, that we would receive it, and does it get assigned then, or we do that separately?
Yeah, two reasons is to acknowledge the contribution so that the person can deduct it on their taxes. But it also restricts it, and functionally, a lot of times the contribution, we've spent that already, and somebody's covering that expense. So sometimes it's ahead of time, so it just depends on the timing. But in the end, it all flows through restricted.
And my guess is, sorry, go ahead.
Well, no, you just clarified something for me. So we have this, like our ambulances and EMTs that go out on calls and they bill people, but it's phrased as a donation, and those flow into restricted fund balances. And I was curious why, because I didn't remember any, but that explains why, because they're
Excellent.
donations, right?
Thanks, Norman. Thanks.
Are impact fees that the town collects reflected here in restricted?
Not many of them.
Yeah, we're going to get to that.
Sorry, we're jumping ahead. here.
That's okay. No, that's perfectly fine. I appreciate the questions. And then the imposed by law, obviously, is if like a state legislature puts a restriction on funds that we may get from them. And my example up there, I use federal educational dollars. That's a classic example for us. Is we get money from the Department of Education, we're going to spend it on education and not anything else. So if we could move to the next one, please.
You know, I'm gonna bring you back, because from our perspective, all education fund balance is considered restricted, right?
Yeah.
Now, is that legal or is that our choice? Are we required to keep that money there?
I will defer to people who've been here longer than me.
Yeah, and I'm afraid I'm not, I don't know the answer.
I don't
to
know
that.
either.
Yeah.
Okay.
Sorry, as I get more familiar,
That's-
I can possibly answer that.
We do have a new auditor this year. It'll be interesting. There may be some things that historically we've done that they may view differently. So there's I suppose that's one of the benefits of having a different set of eyes and attention to it.
In the committed fund balance category, those are amounts that can only be used for specific purposes under constraints imposed by formal action of the government's highest level of decision-making authority, i.e. the town council.
That's an onerous sounding title there.
It is.
Yeah.
It's very elegant, isn't it?
It's for elected officials.
Look good on a business card.
So in this category, committed funds cannot be used for purposes unless the government removes or changes the commitment. So if you as a council commit funds and then those are still available and you want to repurpose those to another category or action or whatever, through your action at the council level, you can change that commitment. And for the year that you reported on your financial statements, typically you have to have that action done before the end of the fiscal year. You can't wait and say, oh, how are we doing? And go back and reallocate a committed.
So it's a one-way trip with committed. You can't go recommit them or uncommit them.
Well, you can, but you have to do it within the year because
yeah.
Otherwise the commitment gets restated on the next
I
fiscal
see.
year.
Under the same authority the council commits to in the first place, you can change their purpose.
Okay.
It takes subsequent action of council. A simple example, I think, would be what we just discussed. The prior council has directed certain monies to go to a working waterfront fund, if you will, and it has limitations and direction as to what those monies can be used for.
Thanks.
Yeah, we talked about that it can be redeployed. So reserves are an example there where you can use council action to change one reserve to another type of reserve. Next slide, please. Assigned is, we're working down the level of action required. So assigned is amounts that are constrained by the government's intent to use for specific purposes that are neither restricted or committed. So you express that purpose, the governing body, and in our instance, you, the town council, have delegated that authority to the town manager to assign various fund balances. Or a body such as a budget or finance committee or official can designate the authority to assign those for specific purposes. So examples are carry forwards for spending in future periods, or encumbrances where you have a contract that you entered into on January 1, and it's a 12-month contract. So that contract is going to span 2 fiscal years. You would encumber that contract on January 1, and that way you're authorized to spend on that contract for the full 12 months. You don't have to reauthorize that spending for the new budget year, July 1.
With assignments, are those to be determined before the end of the year, or does that happen when we're putting together the,
Assignments
annual
happen
statements.
after.
okay, so there's some,
Up
Flexibility
until-
there.
Yeah, there's flexibility. Those can happen up to the issuance of your annual report.
and one of the bigger assignments is, like, for example, from education budget, it's not uncommon for us to put $1 million of their surplus and dedicate it to the next year's budget. That's one of our assigned fund balances.
Yeah, in terms of carry forwards, it very often happens near the end of a fiscal year, but it certainly needs to be done and those decided on before the audit is completed. But so the simple example would be a department head has a certain budget, comes to me nearing the end of the year saying, I really need to carry over this amount because, and I insist that they provide the rationale for that. And I'm pretty discerning in terms of which ones I allow to carry over. But there are a category of accounts that I've been sufficiently convinced that we should carry those funds over because there's a specific purpose that spills over into the next fiscal year. If I don't do that, essentially that money flows to the unassigned fund balance. It has no dedicated purpose, but it was raised and it exists and is available without restriction.
So supply chain issues would be a good
Could be.
example of
Yep.
the use of a carry forward, because you appropriated the money in one year and you can't get the item or supplies until.
Now, here's an odd question. So in the example of fund balance has been appropriated to a future period, the council took action to do that. Tom, in producing the final audited statements, can't undo something the council did, or can he? Or is that a uncertain area?
Well, my authority is limited to within a particular fiscal year of budget.
So what I'm wondering is if, let's say that we get our year-end numbers, we understand what's already been restricted and committed, and we know we need X amount for unassigned fund balance. You can then pick some things to choose not to assign, right? I'm wondering, is the money or our assignments that were determined by the council fair game for that, or is that something that we kind of need to work together on?
Yeah, I'm not sure if I follow you entirely.
We'll come back to it later.
I assure you that the carry forward balances, again, I scrutinize very heavily because I really want to keep as much unassigned as possible.
Yeah.
But there are occasions where there's a very logical reason for doing so, and it happens.
I had 2 questions here, and then if they're redundant with John's, please let me know. But so in our case, we have delegated authority to the town manager in Scarborough for making assignments, for assigning funds.
Correct. And that's in the fiscal policy.
Okay, so that's our practice. What's the best practice, or is there a best practice? I mean,
That's consistent with other governments. So I would say it's a best practice.
And we've had that for a while, I'm guessing. Does it arise from our fiscal policies or where does it reside?
It's
Yeah.
kind of twofold.
Yeah.
It's a good fiscal policy, but it's also an operational ease because he and in conjunction with his staff are closer to the
Yeah.
ground on the data, and
Okay.
it's much easier to make those
Great.
assignments.
Please recall and hopefully be comforted by the fact that I'm still limited by the budget authority that you've given me.
Yeah.
So I don't, those carry forward balances. I certainly don't, I use them for the purpose that they were originally approved. They're not used for other purposes, if you will.
And I know it's in our current policy, and I haven't traced it, but I suspect it's been around for longer than that.
Yeah.
Probably dates back to an older policy.
Certainly been
as
in
well.
place during my entire tenure
Yeah.
here, and I think long before that.
Great. Thank you.
And I guess the other this is a very simple way of characterizing it, but the charter requires me to propose a budget, which I'll be doing in a few short weeks. Then it's really yours to do what you will with. And once you adopt it, you kind of hand it back to me and say, here's your authority, and you can work within this authority. And this is kind of an extension of that, if you will, that might span in from one fiscal year to the next.
Thanks.
And then our final category is if it doesn't fit in any of the other categories that we've previously discussed, fund balance becomes unassigned, the residual. And under GASB rules, the general fund is the only place you'll find unassigned fund balance. Every other fund, a special revenue fund or a capital fund or a component unit, they will not have unassigned fund balance. So,
Unless it's negative, right?
well, if you get down to negative, then you go back up to the next level and you reduce that. And if you're still negative, you work your way back up. So
Yeah.
until you end up with a positive, all your classifications are positive.
So in our annual financial statements, as I seem to recall that, and I haven't looked at the last one in detail lately, but we will have detail for each of these types of funds, right? And have some narrative as in terms of what happened during the year and numbers associated with those, right?
Right. You'll have your governmental fund statements that show your revenues, expenses, change in fund balance. And then if you flip back into the footnotes, there will be an entire footnote dedicated to fund balance, and it'll have the various categories. And those are the things we're working on right now.
And as I recall, there's even a little bit of a caption that gives a brief description of what the thing is, right? So if you're reading it, if you're not someone who looks at this all the time, it would give people, their bearings on.
Yeah,
how to
and that's
follow it.
actually additional information that's not required by GASB, and
Yeah.
but it's been reported previously, and it's
Yep, that's very helpful.
it's very helpful
Thanks.
information. Next slide, please. I just wanted to touch on our fiscal policy a bit. As I mentioned, unassigned fund balance is the residual in the general fund. It's resources for future spending. And it's there to cover unexpected expenditure and revenue shortfalls that may arise in future periods. It's Tom's responsibility to report the projections to the council and recommend actions on how we manage fund balance and any shortfalls. I underlined and bolded the word goal there in our policy, that our current policy goal is to maintain unassigned fund balance equal to 10% of the town's operating budget for the prior fiscal year. So, and we're not to fall below 8.33%, which is 1/12 of a year of the town's operating budget. So that's our goal. If we go to the next slide, please. We also state in our policy that our unrestricted, which is a different definition than unassigned, that our unrestricted fund balance as a percentage of revenue. So we're going to compare our calculation here that I've gone through below. Unrestricted is the total fund balance, and then you take out non-spendable and restricted. So it's committed, assigned, unassigned. Those three categories would be your unrestricted fund balance, and our policy is unrestricted fund balance to not drop below 8% of annual revenues, with a goal of building unrestricted fund balance to 12% of annual revenues. So we have a goal on one side of unassigned at 8% of a previous expenditure, and another section where we compare to revenues with unrestricted, which captures more categories than unassigned.
So I wonder if we could just spend a minute on these two. I think I'm more familiar with unassigned fund balance because that's the one we hear people talk about most often. And, as a rule of thumb, basically it's intended to be cash reserves to help us in the event we get some unplanned issue that we need to have funds for that we wouldn't have normally accrued, right, or have on hand. Correct. And this one is tied to the operating budget, the overall operating budget. But the other one, the unrestricted fund balance, is tied to revenue. So is it safe to say one is sort of like a top line measure and the other is it's sort of like not a net, but it's a more of an
yeah, I think you're right on target where you say our unrestricted fund balance policy is a top line measure. We're looking at our ability to have a cushion in case our revenues don't meet expectations. The other is for our expenditures, which we typically have a little more control over versus revenues. I mean, we have some control over revenues, but comparing the two, we have more control over what we spend versus what we take in.
So I just, as a placeholder, I don't want to delve into it now. I want to follow your lead on this, but I expect this year in this budget cycle, there'll be a fair amount of discussion and focus on those figures and where we are, where we think they should be, and what would we have to do if we were, committed to try to, raise the balances and, of those two funds, right? So, just a problem statement, or just one of the things I think we're going to try to solve for.
Well, I have a question. So I don't want to ask what our unassigned fund balance is because I don't think I can, or we don't know. But if it's below 8%, our policy is saying that the town council has to create like an action plan. And so I think am I way ahead of ourselves here?
No, that's
Okay,
fine.
I just,
It does say that. Yeah.
and so I'm getting the sense that maybe our unassigned fund balance is below 8. And I'm wondering if there's responsibility for us at this point to create an action plan, because it says like it's responsibility of town council to develop a plan to replenish the fund balance within 2 years. And
I think that this is going to become clearer a little later on when we have our
Okay.
discussion.
yeah,
There's action plan is one option. There's other options as well. And the way it's worded, I think Norm would agree, is not perfectly clear. And it's a little conflicting.
That was the point.
Yeah, this internal conflict is one of the areas that I think we absolutely need to clarify. For my purposes, I've always relied and reported the policy statement, which is the unrestricted, and I believe that's been consistent since this policy was adopted. But there's certainly some ambiguity in the policy itself in terms of which one we're using and which one we're comparing it to, whether it's operating budget or revenues.
Well, if they measure different things, you could have targets for both, right?
We do.
You don't have to do one or the other.
We do. So the way I interpret this is that the unassigned fund balance is a constraint on how much assignment authority Tom has. So as long as the unassigned is over 8%, then he can keep assigning. When it's under, that's where you have to stop or make adjustments. is still not perfectly clear because it's phrased as a goal, not a policy, but so there's some discretion that's left in there.
So Tom, if I understand you correctly, your point is that it needs to be clear which one is predominant, right? Like if,
Correct.
right, which one is the primary one, and is that the right measure for us to follow?
It could be argued that I've chosen the wrong measure, but I've chosen the policy statement and I've at least been consistent in reporting that piece.
Well, I hope in the course of this budget cycle, we'll maybe have a greater understanding of, maybe we want to change that. Maybe we want to be more clear about updating and revising those things.
I hope by the end of today, we're all a little more clear.
I like this guy.
Let's see.
Okay, let's go to the next one, please. So just what we've talked about, inconsistencies with policy. I think we all have agreed that we may have some work to do on maybe updating our policy and coming to an agreement on which is best, or whichever path we want to take as far as our targets for fund balance. And that was the entire focus of this slide.
Norm, I want to throw in there that, so the Government Financial Officers Association, the GFOA,
GFOA,
does
yeah,
have some guidelines.
They do.
Right, and I think their guidelines are 2 months as opposed to, or what's that, 16.5% of unrestricted or unassigned. They're a little loose. They target more unrestricted. But they say in some cases it might make sense to do it
Yeah.
on unassigned.
Their recommendation targets things that you can kind of control. So when you look at unrestricted, you've got a little more flexibility in all of those categories than you have with restricted and non-spendable. So
Yeah, that recommendation was the same when this policy was put in place, and there was certainly robust discussion around what should that be, and the council at the time, led by the finance committee, decided on what's in the policy. That's certainly within your purview. The other thing I would just note, in all the, I've heard, and I think correctly, we need to be concerned how the rating agencies view our fund balance position, because at the end of the day, that's the piece that it matters, right? That's dollars and cents to our cost of interest costs and the like. In my experience, the rating agencies, Moody's in particular, what they favor is the approach looking at a percentage of revenues. And I can't explain why that's the measure and methodology that they prefer, but that's the one that they do. And so.
It
Funny
seems
you-
like, go ahead.
Sorry, it's funny you mentioned it because like revenues and expenses aren't clearly defined in our policy either. If you look in our annual statement, when our compliance with this policy is called out, there's like a $94 million number for the budget. If you look at the official statement, it's a different number. So I think I found 3 different, they're not drastically off, but they're not, clearly there isn't a standard yet for which number we pull to calculate this.
It does seem to me that there would be, would make a big difference between whether we're following a top line revenue number or one that is, net of, more of a bottom line number, especially, okay, you have a top line number, say you're tracking that, but that doesn't really tell you how much you have on hand.
They go pretty close.
Are they?
Yeah, because we tend to budget to spend all our money.
yeah, balanced budget theory is you don't spend more than your revenues unless you purposely use fund balance for some.
Can you tell us what you did in Tulsa? Just kind of curious. I mean, is this consistent to how you did things there?
Yeah, somewhat consistently. The goal was 2 months of expenses for the unassigned. Another thing Tulsa did 2 or 3 years ago was they sent an action to the voters to collect a dedicated sales tax. And that sales tax went into a specific fund, rainy day fund, to build reserves.
So it's a local option. I guess is
Yeah,
that what
exactly.
they call it? Yep.
Local
sales
option,
tax.
that's correct. And it took specific council action to draw on the rainy day fund. And there were complicated formulas on what actions allowed them to do that. But the goal of that reserve, that action was to build reserves in order to enhance their credit rating.
I'm not proposing this, but Tom, is that something that is, is available to us in the state of Maine? I
No.
didn't think so.
No,
Yeah.
Not sales tax.
Oh, well,
But that also makes like Tulsa's finances a lot more volatile
Yeah.
because like when the pandemic happened,
Yeah.
they lost that revenue stream.
Right,
Huh.
yeah.
So they needed more fund balance.
Oklahoma municipalities cannot use property taxes for daily operations.
Hmm.
They can only be used to pay debt service on general obligation bonds.
Hmm.
So the primary source of revenue for operations is sales tax and franchise tax and fees for services.
Hmm.
So as you say, very volatile. So the better you can build your reserves to overcome that volatility, the stronger your credit rating is.
whereas in Maine, under the Maine Constitution, we're almost entirely reliant on property tax, and that has its own cruelness and.
Which makes our numbers very stable though.
yep.
Like it's a
Good
very
news, bad
predictable
news.
revenue stream.
Yeah, and I invite you sometime in the next month or so, we'll likely be meeting with the rating agencies, and this, the sort of territory they cover. They're always interested in our property tax collection rate, which is always, just below 100, very, very good. And to them, it's all about credit risk, right? These guys, they have, and oh, by the way, in Maine, if you don't pay your taxes, we'll lien your house and then take it. So we'll get our money someday. That's how they look at it. So we're a pretty low risk, so to speak, particularly when you look at the demographics of Scarborough, we're even lower.
Yeah, I was always astounded by that number, the high collection rates.
Yeah.
That's great. Thank you. Thanks
Huh?
for the aside.
Yeah, sure. Anything else on the policy? If not, we'll move to the next slide and answer your question about what is our percentage? And we're still working on fiscal 22 and 23 days. 23 days.
Is that your, what's 23 days?
23 days is when the US government wants you to file your CFA with your report for grants. 270 days after fiscal year end is policy in our debt covenants that we will complete our financial statements and file them with Emma, which is the repository for compliance for debt issues.
So let's drop that date.
So yeah.
End of the month?
Yeah.
Okay.
Yeah.
Good, because I actually was fearful that we weren't tracking towards that, but it sounds like we are.
We yeah, I think Tom maybe has some staff updates after I'm done that will hopefully make us feel a little better. And but this slide is comparing our ratios of the two different methods of fund balance. The first half, I've yellowed the upper half where we're comparing unrestricted fund balance to revenues, and FY 17 through 21 where
So I guess, so FY 22, if you looked earlier in the week or weekend, was on there, and I think we assessed that it wasn't ready to be on there.
yeah, it was labeled as unaudited, and it's highly unaudited because fund balance is the last thing we analyze in the audit. So we're just too far away to publish a number that's
But by the time you convene again, we will have those numbers.
right.
So I'm always thinking about this sort of, what kind of runway we have as a committee and as a town to kind of get all this stuff done. And it's interesting to me that the government deadline is 3/4 of the year, 3/4 into the next fiscal year that your numbers are due, more or less. So but it does seem like it compresses us
Well,
every year. It just feels like there's a crunch time in the last 90 days. to the end of our fiscal year.
The ideal schedule that we should be on is the audit happens in the fall.
Yeah.
After the end of the fiscal year, and we issue an audit report October, November.
Yeah.
Then we move into the budget and we start that cycle of preparing the budget for the next fiscal year. And in the spring, we go to the market and issue debt. So
There's really sort of a sequence in it.
it's a rhythm. And if we can get back on that rhythm, it makes everybody's life a lot easier and decisions are a lot easier to make.
Pleased to hear you say that. Thank you.
Yeah, and for some, also, a number of reasons, staff related, we essentially lost the fall in all respects. And so Norm started first of the year and inherited kind of a backlog. So this year is I'd like to characterize it as an aberration, and ideally Norm, with this full complement of staff, is going to be able to get on the cadence that he just described, which is, this year it's going to be as soon as he gets done this audit, he's going to start doing collection of the next audit, because the fiscal year is going to close at the end of June.
And updating the fiscal policy.
And
You
updating the fiscal-
you got plenty in front of you.
and we got to come to you with a issuance of debt in the meantime. as
At
well.
some point, we're gonna have to do that, I think.
And oh, by the way, we may be implementing a new cashiering system.
Great.
So
Great.
in our spare time.
So I'm pleased to hear that you're saying it's something that is possible, even though we're not going to be looking for, commitments, hard and fast commitments, this evening or in the next couple of months. But I think it's very promising to hear you speaking in those terms of having a stretch goal, or, a goal that's possibly achievable, of us getting on a cycle that's going to be
Correct.
better for everybody. Thanks.
That's my presentation.
Thank you for pulling this together, Norm. So I wanted to call out some of the numbers. So we know that the GFOE guidance is 2 times, so about 16%. We've trended 12 to 13%, typically a little lower than that, 21. That's not drastically off, but there's certainly room for improvement. The unassigned, our goal is 8.33. We've consistently hovered a little higher than that, but we were below it in 21. And we don't know where we are in 22 yet. Okay, any other questions for Norm? Okay. We're gonna have more fun with fund balance, but we're gonna change gears for a few minutes.
You can see that on a t-shirt.
And
Fun with fund balance.
Fun
Yeah.
and talk about rescinding bonding authority. And I'm gonna try to bring up my screen. If I can figure that out. Here it is. Okay. So we had this on our last agenda, and we talked through and agreed to prepare a rescinding order draft, which looks similar to what we've used in the past when we have unneeded debt authorizations. So I did that here. This is a little different than what we've looked at in the past, in that I actually call out where the budget authority came from, where the bonding authority came from, and then try to tie together how much has actually been funded from that original authority. And off to the right, the will not bond is what we're actually would be rescinding. So we're saying we no longer need that authorization to issue those bonds. Essentially, that spreadsheet is the same thing as the one we talked about last time, with the exception of the green items. The green items, we agreed that we need to keep those. So we know we need authority to bond for the turf and track project, to bond for land acquisitions. There's a fire truck that was approved by the voters. There's a fire department training building that was authorized in 2006, but there was a rationale, a reason for keeping that around. And we have been trying to understand the other items. Is there a need to keep them? And staff has identified some of them in yellow that staff needs additional research. I wanted to spend a few minutes to just, and I wanted to note that the school department did update all of their items, and it was actually very helpful because they identified, that this item was actually funded through an additional budget request in the next year, or we only bonded what we spent. So yes, you can do away with it. But there are at least a handful of things that I wanted to give staff an opportunity to talk to. One of the items was the public safety building. And let me see if I can move this so we can actually see numbers. Is there something you're actually researching, Tom, or
No, I think that was highlighted in error. That project is done. So
so we're
that
good with
could be
that?
included.
I didn't want to touch the staff column.
Yeah, the other items, I believe all of them relate to the Gorham Road projects or
Mostly.
phases of them. And that's a project that is still moving on. There's yet a third phase in view that hasn't even been engineered yet. And so that's my only hesitation, that it's still an open project.
So that's a tougher one. Let's talk about Running Hill sewer, because that's another big one, a big authorization that's out there that's quite old. It was authorized in 2010. It was for a sewer project. There was a road project at the same time that was actually executed, but they never executed the sewer project. From my perspective, why do we need to keep this? It doesn't serve a huge benefit, because if we put it, I think it's unlikely that staff is going to go and issue funds to complete this project without talking to a council or coming to a council. So I didn't see much risk in taking it off the list, but you may view it differently.
No, this authorization was provided right on the heels of the council approving the new zoning in that area. And that zoning requires public sewer to essentially enable the additional new permitted uses. And the notion at the time was there would likely be a public-private partnership to make that happen. And it's been so long, I forget the particulars, but I suspect that bared in some reality of the cost estimate. In one sense, we could have undergone the work to ready the land and kind of make it ready for development and then pay ourselves back either through a TIF or something like that. Conversely, a private developer could do it and we could agree through a credit enhancement agreement. So I tend to agree with you. No project is materialized at this point, although I understand that property, there's an option on it. So there's another entity that's considering to develop it, but I know nothing more than that at this point.
Actually, it might be a good incentive not to have this there, then they can.
Perhaps it will remove, knowing that that's there, and some people do, it's a point of conversation that I'd rather not have, frankly.
Can we have any comments or?
Yeah, I mean, so it's a pile of money. It's been sitting there for a while and hopes something's gonna happen.
But it's not actually money yet.
But
It's
so
just, it's authority to go sell bonds to make money. So
Right.
Sort of,
Or to spend money,
yes,
to borrow money and spend it.
definitely that.
Yeah. So, I mean, my preference for things like this is to, it's been there for how many years? Over 10
13?
years,
Yeah, 13.
13 years, it's waiting a long time. So I don't, something like that, if there's nothing that's imminent, I'd be inclined to make the appropriate adjustment.
Just come ask for it.
Yeah,
So
yeah.
I agree.
I mean, especially if we're gonna have a tight year this year, I'd much rather go through the process of re-litigate, re-approving that, revisiting that as a committee and as a council and as a public.
It creates a little more certainty around what your spending is going to
Yeah.
be.
Yep.
So I'm not saying anybody disagree. So we're good with that? Okay. Yes. Yeah, go ahead, Jean Marie. Sorry, I can't see you from where I am.
Can you hear me now?
Most definitely.
I'm gonna disagree with a whole bunch of you. This has been passed, authorization that's sitting there. It hasn't been funded, but the authorization is there. so we could move quickly on something if we had to. Now granted, 1.4 million ain't gonna buy you anything. But I have concerns because it's my neighborhood. North Scarborough gets the short shrift a lot of times with a lot of things. And I'd be nervous about letting that go. That's just my opinion.
Fair point. What I would say is, what my experience has been with this is when we have a project, we get involved in a negotiation, and usually there's an assumption that the town will pick up the tab, or at least half the tab. And I'd rather negotiate this in real time than to, have it sitting there as an earmark. Jean Marie, I hear you in terms of,
Yeah, but and I can't disagree more.
You know,
I think it gives you a bargaining chip to some degree.
Yeah.
Because you can say, hey, we've got this amount of money. We want you to come up with the rest of it.
well, you and I have disagreed in the past quite often and have done it amicably, so,
The biggest thing I'm trying to do with this is create a window into what is actually out there, right?
Right.
That could potentially be spent. So if we knock it off now, it won't be in front of what goes before the council. If we keep it on there, it's fair game to be discussed at least 2 more times, I think, is because I'm suggesting that we don't do this with a one shot.
I understand.
Yeah.
Yeah,
this-
I mean, I'm willing to hear some more arguments, but if I want us to be very thoughtful before we remove this.
Well, it's the first one we're talking about, so I'm sure we'll get our
Well,
water
why do you
wings.
think I'm sitting here in this finance meeting? Come on.
I cannot believe you attended a finance committee meeting, Jean Marie.
Question, this is for Running Hill. Is this all commercial development?
It's for the roads, so it could be for any.
No, it's not all commercial. You gotta look at, I would suggest looking at the Pleasant Hill. It's like a gateway. The original intent was a gateway that was kind of, went from the main mall, busy area to rural farm, and it's a transition area. Am I defining that correctly, Tom?
Yeah, I would say it's mixed, it allows mixed use development, so residential and some level of commercial as well.
Is it near the connector, the Gorham connector area at all, or not? Is that?
Yes.
Okay.
So I believe the initial thought with this was to get sewer there, you need to run it under the turnpike, right? And
Yeah.
this was
Yep.
a kind of here's a stick or a carrot. Anybody want to help us do it?
Yep.
And
No one does, so.
Nobody has yet.
keep in
But,
mind-
but there's an option supposedly going on that land or already on it.
What if
Yeah.
we don't like that option?
Well, we
Well,
don't
I
get to
don't
vote
know.
on that.
It is. I think it's
Wait,
just
they're
like a big
funds.
for sitting on it.
That's
Just,
what we
just
could-
keep in mind, the genesis of this was the same council that changed the zoning is the one that approved this in the following year. And so I think there was a clear intention in kind of executing or helping enable what they just.
Right.
Well, bringing sewer over the highway though does open the door for a lot more development. That would not.
Not
otherwise
necessarily.
be- Well, commercial. So I mean, my short stint on planning is if you have commercial, you have to have public sewer and public utilities. So to me, this is also a barrier that sometimes prevents growth in certain areas because they don't have the public utilities. And I, again, think this is another tool to, let's take this away. And if someone really wants to bring that over there, that's their expense and they can bring that development to the other side of the town.
So because there's been discussion, why don't we go ahead and vote on this item? Can I have a motion to rescind the Running Hill Sewer Extension Phase 1 or to include that in the rescinding order?
I will make a motion to rescind the Running Hill Sewer Extension.
Second,
Second.
all those in favor? Okay, it's unanimous.
So,
Jean Marie, this is not.
I
the
am
end.
unhappy with you guys.
well, that's, I mean,
Right.
so the point is, this is a committee recommendation,
I
there's
know.
several other steps, right?
I
So
know, but I take names. No, I'm being.
No threats at
You
finance
said it was
committee
a
meetings, Jean
Christmas
Marie.
list.
I also wanted to, before we get to Gorham Road, the voter approved ladder truck. We asked for 1.2 million and that 1.2 million has been funded. It's just been funded through a combination of bonds and bond premium. You had this still tagged as reconciled, Tom. Are you okay with rescinding
I
the
don't
remaining
think those
authority?
are
Are
my words. I'm not sure who put that in.
you okay with
Yeah,
rescinding?
that truck is in service.
Okay, Cummings Road. This was a project from 2016. It was executed. It came in well under the initial budget that was authorized. So the initial budget was 484,000 almost. We ordered bonds for 483,000, the full amount. We only sold bonds for 245,000. Or those were the proceeds. There was some premium there as well. 250,000 is left to be funded. So I should probably give a little background on how I pulled this stuff together. I was digging through old meeting minutes, trying to understand what's been ordered, authorized for bonds, what's been authorized for budget, what bonds have been sold. And there's only so much history that's available. So actually Tom and Tody got me access to the full history of all the council actions that authorize these things. In addition to a spreadsheet that Ruth had been maintaining for these. So this particular project on Ruth's spreadsheet, Mike Shaw, MES's Mike Shaw, who was the former Public Works Director, said that the project was done and they're not going to need the additional funding. I don't know if that information helps with the research that you're doing, or is there something different?
I'm fine with that.
Okay. Anybody? I don't know what else we would do with, I think the project is done.
It is.
Another one that I think is easy, in 2006, there was a motion during the bond order meeting to amend one of the library authorizations. That was reflected on the bond order, but the total at the bottom of the bond order never changed. And that's what was approved. So there's no project tied to this. It was just kind of an excess that's been hanging out there. It's $113,000.
That's the bad math item.
That's right. I probably, and I don't know what capital improvement it relates to, but that's how I identified it. So I had to, in that situation, I had to make up a dummy project to account for it.
Good choice of title.
Thank you. Okay, now Gorham Road. So the capital budget was 2.2 million. I tagged capital budgeted for bonding at 2.2 million, but that's not completely accurate. When the project came forward to council, there was matching funds that were suggested that were going to come from the state, around 750,000. It turns out the state only kicked in 700,000, but we did order bonds totaling almost 2.3 million, and that's what we got in return. So we ordered bonds that exceeded the original budget, not counting any proceeds that came from the state of Maine. So, and I think this came up last time, but on the actual rescinding order, I have a column to amend the capital budget so we can true some of these things up. I don't know if I don't know how much has been spent on this project or this phase of the project. And there's other items that are on the list that relate to this project as well, like the engineering and I think a whole number of studies. And then there's phase 2 and now a phase 3. What I guess I want to understand what you want to research on this project.
Well, I've asked the town engineer to dig into it. She started that. Certainly phase 1 is complete. I do know that subsequent phases are really challenged from a financial point of view. So to the extent that there are potentially resources available in an earlier phase to help complete what the project that needs to get done, I guess I would ask for some additional time just to make sure we truth these out, and we could certainly circle back to you and have a subsequent action of this committee and the council. I don't think it's months. I think it's perhaps weeks.
So, and that's why I want to stretch out the council process as well.
Yeah, I think it'd be helpful to learn more. I mean, this is clearly an uninformed perception, but when will Gorham Road be finished? I mean, sort of
I think there's, 3 isn't the end either, right? There's
No,
a,
there's envisioned a fourth, but yeah, not even off the planning board, off the drawing board, if you will.
so this is, like the school department, I kind of like the way they do it. Some of their multi-year projects or multi-phase projects, they'll close out the old year and start a new year. Though my preference for handle, like there's no budget left on this. So you've already exceeded your budget. So any authorization that remains is just for bonds that you can't spend because you don't have budget for that one. I prefer just put it in the next budget. Would be my preference, is just identify what you're going to need to keep tying things up. This has happened a couple of times where when we Norm did a good job of explaining bond premium at our last meeting. When we make a decision to sell bonds at a higher rate, like 5%, there's sound rationale for doing that, but it assumes that you're going to use all of the proceeds from that bond sale for the projects that you listed. In no way does it contemplate that you're going to use the proceeds for this project and then go out and issue more bonds on the premium. The math would be drastically different. It would never tell you to do that.
So if I understand what you're saying correctly, this is almost $100,000, 96,000 and change, is really closer to 150,000 or 105,000. If you use the bond premium, you're spending, dollars that are worth.
Sorry, bond premium.
So bond premium is, we go sell bonds, and we get money
Okay.
in exchange for that. And that's really all we need to know, I think. But the money we receive can be broken into 2 categories. It could be the par amount of the bonds that we sell, which is what they can turn around and sell it for. But then there's also another pocket of cash that can come. So in total, we get what we were looking for. It's a play on the market forces because in order to sell our bonds, we might need to incentivize a higher return or something. And to do that, we get more money upfront that can still go to the projects. The idea is with the way we make the decision of whether to do that or not, is we look at, I think it's called true interest cost, which is a valid way of doing it. You discount everything back to time 0 and say, does this make economic sense to do it this way? And it often does. But what that evaluation doesn't contemplate is that you're then going to issue more bonds on that same authorization, because that would throw it completely. And it seems as though that's how we've been interpreting it, is that those authorizations are still there because they are technically. That's part of what I'm trying to clarify with pushing for the rescinding order, is that really we need to go out and, one, increase our budget and ask for additional authorization.
Yeah, the bond premium is not something we necessarily ask for and don't know if it exists, and if so, how much, until we actually receive the bids. And before we award the bid, we do need to decide, and as time allows, more times than not, I bring these matters before the finance committee to seek your advice in terms of how we're going to, one, do we want to accept this bid with premium? And if so, how are we going to apply that premium?
Yeah, I mean, it's a great question. The issue that I'm having is trying to balance. I mean, I suppose it depends upon what we think the markets are going to do and what our need for funds are going to be in a given year. So rather than kind of keeping it, it seems like we ought to really just sort of, reduce the exposure, right? Is that the right way of looking at it?
Yeah, you look at it as a portfolio. So we needed this much proceeds to support these projects. We got it. So that's done. Now, technically, the way our bond orders are worded, and there might be another way where it leaves an open authorization. That's why we have a bunch of stuff that we probably would be better off not having to.
Yeah. But
try to go through.
Given our practice in terms of our willingness to kind of take on debt, it does seem to me that we could change that bias, and maybe, do something that is more austere, rather than just expecting we're going to continue to have a need for big capital.
It puts more certainty around what's out there.
Yep.
You know, what the pool
I
of,
see.
or what the potential is for what we're gonna spend
I
on.
see.
Um,
But it's interesting to me because, but it's like following the bouncing ball, right? Because it's, we funded it for a certain project and now we're talking about what's going to happen with that project, whether it's going to go or not, and then what to do with the, credit or the,
Well, it drives me
expense.
nuts. I don't have time to do it. So when we issue a bond order, typically that's followed by a bond sale. If you look at the bond sale, it lists, what orders authorize each of these items. So a lot of them, most of them will relate to the order that we just issued, but some of them relate to older things. And that's where there's discretion involved, and I'm trying to close that door.
Yeah. But it's interesting to me, there's no like single policy statement. You've got to kind of do this case by case because each one is a little different. Is that, or is there again, I say,
Some of
I
them,
wanna-
we could tweak the way the bond order is written.
Yeah.
I think that might close that door.
Yeah.
We can look at that.
Okay.
Right now, it's
Okay.
there. I think it's valid that it's
Okay.
there.
But
Thank you.
this exercise we're going through, we've done several times since I've been here, not perhaps to the depth that this one does, but the same premise that the project is done, the bond authority is no longer needed, and so remove it. It's just, I'm a little anxious just with the fact that some of these projects are still ongoing, and I just haven't had the time to really do the forensic review of it.
So subsequent phases are still ongoing,
Yes.
and there's open budget, and we're not contemplating closing any of those or I'm not suggesting, I'm only suggesting it for the ones where the budget's already been fully funded.
I don't know what rates were like in 2018, but my guess is that, rates are going up, so it's going to cost more to go out to bond, right? Is that a fair assumption or not? I don't,
I think that's rational.
yeah,
Norm probably has a better beat on it.
Yeah.
Yeah, our cost of borrowing is going to go up.
thank you, thanks.
So why don't I flag that Gorham Road, and there's several of them, so I'll flag them all as pending. I would like to see that before council on the order, but then allow additional discussion. So
And
we can
Tom, you
remove
mentioned
it.
you're expecting more data from Angela on that, right?
Mhm.
Yeah, so,
I don't know what the expected timing is before
Yeah.
council.
We haven't moved it out of committee yet, so once we do that, it will, I would suggest it multiple readings to allow for plenty of time.
As soon as next Wednesday.
Doesn't have to be. So what I'm tracking towards is having this stuff cleaned up before we go issue bonds again. And I want to allow plenty of time and plenty of runway for,
hopefully that's not next Wednesday.
it will not be next Wednesday. The senior recreation area, that's another one where the project budget was 100,000. We ordered bonds for 100,000. We received proceeds for 100,000. We only had to issue 88,000 of bonds. So there's an authorization still out there for 11,000. Do you know what?
There's parts of that project that were never completed. So that's something we may well have a need to tap into.
If you do that, you need more budget. So you have to put it on a budget, or you need budget authorization somewheres.
Trying to make sure there were two different projects near the high school.
Let me guess, another pickleball court.
I'm fine with that. Tennis courts are important too. So most of these were that situation where the budget was already fully funded. Let me go back to that one. I'll make sure I'm not lying to you. So this project ID is useful to trace things back against different. This particular spreadsheet is actually at a bond order level. A project can have multiple bond orders. If you want to look at the project in total, you can come to the projects approved tab.
Mhm.
And if you paste the project number, it's this one. So I was right. It's the same. So there was only one bond authorization on this project. And it's for 100,000.
That was in 17.
Yes, so the budget was in 2017. Now I'm gonna come here. And the bond order was in 17 as well, 17037. This is my
You
worksheet.
created this?
Did,
Okay,
okay, it's a work in progress.
that's amazing. Well,
Okay, on I think the school department was okay with all of them, with the exception of the ones that we weren't contemplating.
Turf and
Rescinding.
track, I think, was the one that they flagged.
Yep, and we already had that
Yep.
identified. Okay, so we have other things to talk about today. Did you have other particular ones you wanted to call out, Tom?
No.
Okay, can I entertain a motion to recommend to the council to rescind unneeded and unnecessary bonded indebtedness in accordance with the spreadsheet that we just worked through. I don't know, I didn't phrase that very well. I have a motion to pass this on to the council, where it's going to now be a PDF that will be static and won't change unless by action of the council.
I move to bring forth to the council the recommended rescinding bond orders.
Great. A second,
Second,
any discussion?
I just want to make sure that we're not done with the exercise, right? So we had some discussion about one item, but we would expect to continue that discussion and move to complete the list. Yeah,
What I anticipate is I want to know how much money is left to spend on these projects
Yeah,
as well.
yeah.
And I want to put it in the budget.
Yeah.
If there's no existing or remaining budget.
Yeah.
Some of them, there might be budget out there
Yeah.
for already.
I just think that's going to be probably more than one meeting or a long discussion, right? So,
It might be.
Yeah.
Staff might be able to reconcile some of it
okay, all right.
themselves as well.
So it's an iteration, we'll have an iteration of this and hopefully have more things resolved by then.
This is what would go to first reading.
Fine, okay.
And I would not recommend that we just, in the past, this has just been a one reading.
Yeah.
Exercise. I would
Yeah.
suggest
Just point of
multiple.
clarification, so then the motion pertains to all items listed on the spreadsheet regardless of
Uh,
other
Not
than the
the-
shaded items.
not the green. Yes.
And it just,
And with the Gorham Road, what I think I would like to do on the rescinding order, if you want to do this, Tom, you can, just go through on the notes and add that staff needs additional time or research on this.
and I'm just wondering how, how and when should I bring the information forward? It's going to come to council as you approve. And so
Exactly.
my action, my suggestion will be to remove certain items.
Exactly. And I just want to do that publicly, so this is the list that came out of finance. And then at the council, we can choose to remove things from the list. I think that's totally fair game.
Yeah, it doesn't seem like we've solved the process for that yet, but we could say, put everything through as recommended by the committee and then we put stuff back on, or do it that way or
So
go
that's
one
the
by
other way,
one.
but then it's off, the default isn't for it to go through.
Right,
That's
right. So I'm sure we'll probably have a chance to talk about that do we have a recommendation on how we should do it process wise? Or you want to defer that to,
the standard procedure. I mean, you can, council leadership can build extra process around it, but the
Right.
standard would be, this is what's in front of you.
right,
Any counselor can motion
Right.
to amend.
to put it back on, but otherwise we're recommending the.
Well, it would
ones-
be to take it off the list.
Right,
It'll
to
be there.
remove the ones that are indicated to be rescinded.
Right,
to-
so it'd be challenging for a counselor to motion to put something on the list because they're not
Right.
gonna know what's out there.
That's how we should do it, the way you described, right? So we do want to do that
That's
in.
what
the-
I think.
Yeah, that's what we're voting on.
Yes,
Yep, we're moving the whole list forward.
move the whole list with the exception of the green. And we're
Yeah.
gonna tag on the actual bond order, the ones that staff is still
Yes.
pending analysis. And I'll
Yeah.
be open to motioning myself to remove them at that time.
Okay.
I just mostly want to keep this moving
Yeah.
forward. Again, it's not a rush item, but.
Yeah.
um,
Well, this has been an enormous amount of work. John, thanks for leading this and creating the whole thing. You know, I would expect in the future that this would be a staff duty, right, rather than a counselor duty.
It's unlikely that I will produce another one.
So just make sure we well, set that expectation. So
Okay, with that, all those in favor? Yeah, it's unanimous. The next action item I'm not going to spend a lot of time on. It's more informational. We did talk about this at our last meeting as well, is for us to start thinking about what we would want to see as a committee the next time we're asked to approve a bond issuance or order. And we looked at our policy. I whittled down to just 3 items, and I think this is reasonable. It's just give us an update on the project, how much has been spent to date, and how much will you need in the next 12 months. Now, this worksheet has every project that's been approved in the budget over the past 15, 16 years. And it also assumes that the rescinding order has been passed. Otherwise, there would be open authorization. So a lot of these projects are from 2023 up at the top. That's sorted by year and by size. Pretty much nothing in 2022 or 2023 has been authorized for bonding as yet. So I expect that those are probably going to be on the next list. There are, certainly some older ones that still have budget authority. That's a little different than bonding authority, where it means that there's still unspent budget on the project. So they're fair game to come on a future bond order as well. So again, I expect this will, I don't know when this is going to be working the queue, maybe the summer or something, by the time we actually issue bonds or are ready with a bond order.
I would hope it's sooner this summer, but the plan is later this spring.
and
Mhm.
what was our, there were the past couple of years, we didn't have major things going to bonding, right? So what did we do last year, do you recall offhand?
We didn't issue anything last
None.
year.
And then the year before that, I think was also
It
pretty
was smaller. There
small.
was, I think, the end of the public safety building and
3.72.
Okay. So this number, the new CIP amount is 8 million. That's a big bump from the past 2 years, even a bump from the past 3 years.
the new CIP amount.
Yeah,
Oh,
is it 8 million?
so
At least if I'm looking at the right tab.
I didn't have this organized very well, but so at the very bottom, there's totals by year, which might be interesting for you to look at. The capital budget in 2023 was 10.6 million, it was 10.7. It's a lot less than that in 21 and 20. One thing that I thought found interesting though is we're contemplating using bonds for much less of our capital that's been approved recently than we have historically, which is a nice trend. We're using other funding sources for our capital projects.
Okay, I'm in the wrong tab, sorry.
Okay.
Sorry for that. I was in the capital projects plan for approval.
Oh, so that's what was in last year's budget book
Okay,
for approval to
I
be
see.
approved this
I
year.
see.
I wasn't planning on going over that again.
Okay.
Because we're going to get what's actually being proposed
All right, sorry, wrong tab.
in a few weeks.
Okay,
Yeah, this one's the capital projects approved tab.
You might recall in fiscal year 21 and 22, 21 in particular, there was very conscious effort, in fact, a directive from town council to really dial our capital spending back.
Yes.
Really, we're in the depths or, the uncertainty of the pandemic. So consequently, that capital plan that year was considerably lower than normal. As it's
For 2 years, really.
identified.
Yeah.
Yeah, 2 years.
Yeah, this is, well, it was a combination. You were still working through the public safety building, which was a pretty big one. And then COVID hit. So I'd like to understand, I'm trying to be reasonable with this, but for the ones that we want additional bond authority for, project status, how much has been spent, how much we expect to spend, is that
I think it's reasonable. We need to do that analysis for ourselves.
Then I don't know that we need an action item to do. I just want to I don't want anybody to be surprised if I ask for it and then all of a sudden we need to sell bonds in the next couple of weeks. So trying to create some runway for everybody.
I don't
with
think
this
you
one.
need to take action. We appreciate you expect this level of detail when we come forward with the list of projects.
That's
to move
all.
on.
So we don't know. We don't have a number yet, really.
No, the staff's going to propose something at some point.
Okay.
Okay, so I'm going to not call for a vote on that because I think we have an understanding that
Work in
that
progress.
is good, yeah. Okay, now we get to talk about fund balance again. And I don't know how this is going to go, and I don't know how it went. I also don't know how to move this thing on my screen so that I can get to another file. Here it is. Okay. So this all comes from the 2021 annual statement. It's kind of a more detailed statement 3, which is our balance sheet. Oh, I do, don't I? Thank you for telling me that. I just moved that on my screen too. I may need help. Oh, stop share. I see it. Okay, and then reshare? Okay. That's a safeguard, isn't it? Okay. Okay, so we're back to statement 3. I think Norm's presentation did a great job. What you may not have picked up on was fund balance is actually the difference between your assets and liabilities. So I don't know, I don't want to get very detailed. I know that you have to qualify a lot of statements, but I'm going to keep it simple. It's assets minus liabilities, okay? You can break these into different categories, right? So your assets are things like cash, investments, receivables that you might have out there. We also have a category called interfund loans receivable, then a couple of smaller items. And we break things, these are our major funds. So the general fund is our, pretty much everything flows through there, but we identify things elsewhere as well. One's the Higas Parkway, and then this other governmental funds, there's a whole bunch of them that just all consolidate down into that column. If I look down into the interfund loans payable, these are things like the Higas Parkway. And we also had some receivables set up for school and town improvements. So those are assets. Liabilities are things like what we have to pay on payroll, compensated absences, sick pay. There's also a liability for loans payable. Like you'll see that the Higas Parkway, for example, it has a loan payable under the Higas Parkway column and a receivable under the general fund. Am I losing everybody out? So in total, the assets minus the liabilities and these whatever deferred inflows is equals your fund balance. That's 15.75 million as of June 30th, 2021. So that's your starting point. That's your total fund balance. Then you break it into categories. And this is an exercise that I think staff is going through right now with the 22. Some of it is non-spendable. And for us, that typically isn't a big amount. It's the non-spendable inventory is what's classified as non-spendable. And per our policy, it's the responsibility of the town manager to classify non-spendable fund balances. It's also the town manager that classifies restricted. Now, restricted, it's basically 2 numbers. I don't know if you remember that when we looked at the Higas Parkway, the 2.922812, that's the loan for the Higas Parkway that's showing up there under restricted for town. And restricted for education is basically the surplus from the school budget or the school operations. So the restricted and the non-spendable, we don't have much discretion over. it kind of is what it is. The committed is a result of prior council actions or current council actions, or I guess all prior when we're talking about an older year. And there we have things like unemployment compensation. There's an account probably isn't the right word, but there's an allocation for Herd Park and Ferry Beach. And Councilor Shoup asked a good question about this one earlier today about what those funds can be used for. And we traced it back a little bit. It looks like we plan for our maintenance and improvements at the beaches to be funded purely by revenues collected at the beaches. So parking fees and stuff. So this is the amount that's left over after we take care of our beaches over time and whatever improvements have happened in the past is at 285. And the Honeywell House, I know where it is. I don't know what the money comes from. Maybe we rent it out. We haven't traced. So the idea is that some of these things are out there, and this Herd Park has been out there for many, many years. It's okay to revisit them once in a while. And I think Councilor Shoup was inquiring about, can we use those funds for like the foot pier? The answer is I don't know. As a council, we could certainly modify what the allowable uses are. But then the other thing is there's no committed fund here for that use. I think it shows up in the special revenue funds for the foot pier. I'm going too detailed now.
So quick question for you though, if those are funds that are, don't we have to get approval for those if they're over a certain amount? Doesn't it have to go to ballot?
So this is just an allocation of your total fund balance,
Right,
right? So some of these funds have been earmarked for specific uses, but they haven't been used yet.
right.
So these in particular have been earmarked for particular use. Whether it requires voter approval would depend on
Well, I know we had
how big it is and
Right.
if
It
you
used to
have
be
issue bonds.
400,000. Now it's 600,000?
600,000.
So I just, the Herd Park number keeps kind of echoing in my brain. And I just, see it earmarked and, keeps popping up, but I don't recall if there was ever, we ever approved that or authorized it as a council or that it went to ballot. Maybe it's under the wire now because we raised the limit that has to go to ballot, but.
It was prior councils that
Yeah.
authorized this one. I believe, I was only able to trace this one back. So it used to be a special revenue fund. So it used to be reported separately from the general fund, and something with GASB 54, and I don't know what, said this is now going to be counted in the general fund. So at that time, it became a committed fund balance. But it changes every year. So the difference between what we bring in for parking revenues and what we spend for maintaining the beaches gets added to the fund, so far as I can tell.
And the use of that fund, you'll see as part of the budget proposal.
There is a line item. Yeah.
In part, it's received as a revenue to offset some of the beach-related expenses to run the operations. In other cases, capital costs are covered using these funds.
But that's,
Councilor Hamel, I think you're confusing what's being discussed here with the Herd Park project, which is a 610,000 or something.
okay, so this number does not include
This
that.
is money sitting
This-
there that
No,
is available to be used for those purposes,
Right.
but has not been appropriated yet. Maybe that's the right
Yeah.
word.
that's the available balance right now.
Right, so,
Or
but
has it
there
been.
needs to be an act of appropriation by the
We
council.
typically come through the budget.
Okay,
So for the Herd Park, for example, if they put that in the budget, they could list this as a potential funding source.
okay.
Yeah. Okay, and then I'm going to do unassigned first because I think it does make sense. Again, you have total fund balance of 15 million, and that non-spendable is 28,000, restricted is almost 5 million. The committed is about 550,000. Well, if you add all those up, you get a number. If you check your unassigned first, our policy says that we should have 7.7 million of unassigned. What we actually had was 6.3. And I say the policy says that I need to qualify. The goal is to get there. Okay. To get that to the goal, you can look at what's been assigned. And these are projects that were some of them were clearly by active council, and some of them were by the town manager, and others I don't know for sure. So I don't know that I have this split between the town manager and the town council totally right, but I know that we, through the budget process, appropriated funds for from fund balance for that next year's school budget, and that was $1 million. What I am understanding from Norm's presentation is if I hit delete, we know, and I think it would require an action of council to actually delete it. Then that can get us much closer to our fund balance target.
Mhm.
Okay. So that's the, or goal. That's the idea. And then when you can also check it on a revenue basis, and the unrestricted is also clearly within our policy right now. If you wanted to raise that, that's a little more challenging. There, you need to change something up top.
Well, it seems to
Need
me.
more assets or fewer liabilities.
Yeah. So I understand the challenge here. I suggest we model both of those. You know, I know that we're kind of,
They're both important to look at,
Right.
or meaningful to look at.
and we follow one versus the other. There's one that's a more accepted number, but I think that it would make sense for us to, you know, have that conversation about both.
Well, it may very well be that as Norm works through the audit this
Yeah,
year,
right.
that he finds, oh, if I use all of these assignments and all of these commitments, all of these past council actions, that I have a gap that I need to fill. And we could fill it in that way, or the town manager could fill it in the ones that are under his discretion, or we could choose to let it be.
But these are all 2021 numbers.
This is 2021.
So I just want to make sure for the public and for our own, you know, managing our own agita, that we don't get too carried away with it yet until we get an updated set of numbers, right? 22 numbers.
Exactly. And I'm going to undo that delete, so don't mess me up. But
Trying to self-medicate.
it's it's making me caught. So when we look at the budget this year, there's probably going to be, because there's a big surplus in the school department, there's probably going to be an item there to appropriate some of that surplus to the next year's budget.
Yep.
And barring additional information, my conservative nature would say, well, why don't we just allow that to go to fund balance?
Yep,
instead?
yep.
Um,
We haven't done that in a while, right? A surplus from the school to go to the town.
Well, it's
Right.
it's pretty consistent every year. They
Is
put
it?
it towards the budget. And it's also been fairly consistent that they haven't needed it in their budget. So there's some excess building there.
Just appreciate the consequence of that decision. That's a very simple one in terms of changing our fund balance position, is that's considered a revenue in the budget. So we have $1 million less we need to raise the property tax or find from other sources. So
That is the devil
that's
in the
been
details.
age-old challenge we've had with building fund balance.
Yep.
Is that it puts upward pressure on your tax rate.
Yep,
And historically,
Yep.
Low tax rates have went out. And so there are only a handful of strategies to actually build fund balance, and none of them happen quickly, frankly.
Yep.
A single year is not going to significantly change, but it's about charting a course and staying true to it.
the challenge I'm having is to try to develop a basic understanding of what the key themes are going to be for this budget cycle. And without 2022, we really don't know, but this is really helpful in terms of trying to get us, you know, on the wavelength of the sort of things we're gonna have to talk about.
I'm trying to get us to a baseline so that when we do have 22, we can hopefully go through this stuff quickly and
Yeah.
understand,
Yeah.
you know, are there holes that we need to fill before we jump into the current budget year?
But I think it's important for us to reassure the public that this is very early for us still in the process, even though it may not look like it's early on the calendar. It's early for us in terms of the steps we got to go through.
I haven't seen the budget or the audit, so
So just.
Yeah.
you know,
but we will. Yeah, we're trying to get
just
ready.
to set expectations. Thank you.
Okay, I see that we're running close to time. I did want to allow, if anybody, members of the public would like to speak or comment, please come on up. Are we okay? Are we doing it here?
Hi, Marvin Gates, 423 Black Point Road. Great discussion. Pleased to be here and listen and learn a lot. In talking about fund balance, I always think of it as the fund balance as a means to an end, meaning rating agency status and the specifically bond rating, investment grades, and in Moody's, which has come up. As everyone knows, we don't have prime grade in either Moody's or Standard and Poor's. I don't see anything as a resident of Scarborough that should prevent us as having that be the goal. We're headed to borrow a lot of money ostensibly, and you want the base rate. In Moody's, we're at AAA3, which is the bottom end of the next grade down, high grade. And that means we're only one step from upper medium grade if we're talking about going down as opposed to going up in our bond ratings. And this is where fund balance comes in for me with the Moody's factors that could lead to an upgrade. Well, we know them. We keep growing. Continued growth in the tax base. Obviously, Hygas Parkway is a bugaboo that needs to be taken care of. Everybody knows that. And yet I think in terms of worst case scenario, which is what if we get bumped down into the next category in the Moody's department? So factors that could lead to a downgrade. And nobody wants to look at these, but the point of all my remark here is to what's required, as the town manager said, this is a long-term strategy. It's not going to happen overnight. And as far as raising the fund balance, and the factors that could lead to a downgrade are what concern me, as I said. And one of them, bear with me, is this according to Moody's, and it's for Scarborough. There are only 3 of them. And that is a trend to tax-based declines or deterioration of the demographic profile. And Scarborough is so lucky. We have great demographics. I mean, as a town, you think of Proutsneck and Pine Point and the coastal communities, Higgins Beach. Obviously, this is where I'm saying something that's politically incorrect for the sake of relieving you of having to say it and to provide some political will to bite these bullets with fund balance. A deterioration of the demographic profile. Well, nobody wants to touch that with a 10-foot pole. I was at the GMO Council Corner Live revising the GMO. And basically and the council chair, I was privy to the results of those and part of the discussion. And this is my final point. There was a conversation there that enterprise business park development, which are great demographics, versus workforce housing, which are slightly less great demographics. Again, nobody wants to say this. The balance was toward the workforce housing. And the enterprise business park in these was sort of, we can't do that. And I think you have to really think of fund balance in these terms. I know you know this, obviously, of this potential to downgrade the bond rating. And when well, I've already said it. We all know what I'm saying. Thanks very much.
Thank you, Mr. Gates.
Richard Hayes, 21 Martin Avenue. Just a curious question with the exercise you went through with the old bonds. Is it possible that when you issue bonds, you also issue a termination date to go with it? That if, I mean, in my mind, something that's 10, 12, 13 years should be you know, should be gone. I would suggest that when bonds are issued, there's an end date tied to it. The money isn't used in 3 years. Let it, you know, the town manager or whatever reapply for the project's use, but thank you.
I was wondering if there was like some sort of policy language that we create, so we're not doing this exercise and looking at bonds that are sitting there from 10 years before.
So I talked about it years ago. I didn't go down that path because while the prime example is the land bond, right? This is an authorization that the voters gave to us to sell bonds for to buy land, basically. So that is one of our bigger outstanding authorizations. So once you issue the bonds, you get the money. You have to spend it. It's done. What we're talking about today is prior councils or this council gave the approval to issue bonds that were never sold, that weren't issued. And there may be an elegant way to work it into the bond order. That's something that I think is probably worth trying to understand better. Any other, I think I saw somebody on.
Peter, you can speak if you unmute yourself.
Can people hear me?
Yes.
Yep. Thank you. It was a great presentation. Couple things, and I'd like to kind of just go back to, and I know you can't answer a question. Again, Peter Hayes, at 5 Indian Hill Lane, Scarborough. On the slide of the numbers, which is really interesting on page 16 in your presentation, two things I wanted to point out. I did have a question where every year the numbers that were used by our bond counsel, Joe, exactly matched our numbers for unassigned fund balance. But for 21, Joe's numbers that he used were $1.3 million higher than our number. And I'm just curious why there'd be a discrepancy and whether that creates issues with credibility as we report out to the broader market. Two, what I'd like to point out on that exhibit is really maybe looking at root causes. If you actually look at either one of the ways we're describing both unrestricted fund balance and unassigned fund balance, certainly from 19 to 21, both of them are declining. And that's a trend. And I want to call attention to when Joe reported out to the Finance Committee in 8/16/22, these were his comments, and I'm assuming it was on 21 numbers. He says, okay, fund balance, look at that trend. We don't like that trend. He goes on to say, but this is a trend that we want to reverse before you come to the bond market. And I don't know what your 2022 is going to look like, but please, in your 2023 budget process, try to pay attention to this if it's not too late. And this is the only flying element that I can see for Scarborough. So I think he was raising a red flag last summer. And then the last thing I'll point out too, we do have a policy when audited financial statements are supposed to be delivered to the town council, and that I believe is by year end. So again, you know, we're sitting here without current information to inform all of you as you enter the budget process. So I just think that's really critical that you really get those numbers so you can see if that downward trend has continued. But I think it's really important to understand what is the root cause that is causing both of those metrics, no matter how you measure them, to be declining. There's got to be an underlying reason that is happening. And yes, we can reclassify some of the bonds, but those were in place before and they're not new. So you can take them off the ledger and that will improve the numbers for now, but it doesn't take away that we are dipping into reserves to run operations. So that's just a concern. Thank you.
Thank you, Mr. Hayes. Any other members of the public that would like to comment? Okay. Seeing that, Peter, I did note your question. It's not my presentation. The number from Joe Couture's presentation last year was actually from the town's official statement. So I don't know if it's fair to attribute it to him, but at that time, that official statement, the 2021 numbers were unaudited and there was a note, an adjustment made in there. And I think that just flowed through to his presentation. So Are we good to go? Okay, can I have a motion to adjourn?
Motion to adjourn.
Second.
All those in favor?
Thanks.
Thank you, everybody. Have a
Thanks,
great
John.
night.
Great meeting. Thank you.